Next question. Explain benefit of the securitization to the investor. We understand that there are certain advantages to the investor like this. First, it is an investment opportunity in the market. In a simple way, it is an investment opportunity. Second, you will be able to say make the investment as per risk bearing capacity. Now what happens, friends, whenever special purpose vehicle is issuing securities, at that time the securities can be issued for the different tranches. What does that mean? It means something like this: tranche 1, tranche 2, tranche 3. That is the way the different tranches of the securities can be issued. Wherein the special purpose vehicle will tell to the investors like this, that in case of any bad debts, tranche 1 will bear the maximum bad debts which are initially occurring. Afterwards, tranche 2 will bear the bad debts, and lastly the tranche 3 will bear the bad debts. What is the order in which the bad debts will be borne? It is say like 1, 2 and 3. So over here, what will happen? The rate of interest which is offered is highest for tranche 1. Why? Because they are going to bear the maximum risk. Lowest in tranche 3. Why? Because they are going to have the the lowest risk. And over here, set is the medium. That is the way, say, the three different types of securities that can be issued by the special purpose vehicle. Now, as an investor, if at all my risk bearing capacity is very high, then in that case I can make investment in the securities of the tranche 1. If my risk bearing capacity is low, I will make investment in securities having less risk, that is in tranche 3. That is the way, say, based on the risk bearing capacity which I have, I can make investment. Next, again I will be having say an opportunity to make investment say as per the cash flow requirement. Again, what will happen in case of say this kind of structure? It may happen that say there is any early repayment of loan. So whatever the cash flows which special purpose vehicle say was expecting, in comparison to that, say there is an early cash accrual. In that case, again the special purpose vehicle might have told in advance to tranche 1, tranche 2, tranche 3 that in case of any early repayment, say it will be first given to first tranche, then it will be given to the second tranche, and then it will be given to the third tranche. That is the different kinds of securities which are issued. In that, say first of all we will give the early repayment to the first tranche, then second, and then third. This is the sequence, or this is the order in which say we are going to say give the repayment. This is the way we have say kind of early repayment of the loan will be used. So if at all when I am subscribing the securities issued by the special purpose vehicle, I have the requirement of the cash as soon as possible and go for the first tranche. If at all I am a fund like it is a pension fund, then in that case they have the usually the requirement of the funds over a long period of time and go for the tranche 3. So whatever the kind of requirement of the funds which I have, accordingly say I will be making investment in the different tranches. This is what say we understand. Fourth, there is a concept which is given a name as cherry picking portfolio. Now what do we understand with the term cherry picking portfolio? I explain that to you. What happens at this is the balance sheet of originator. Special purpose vehicle to whom assets generating steady cash flows are transferred, and against that, so the special purpose vehicle is going to issue the security, which investors are going to subscribe. Now, basically, the bank may have, first of all, said direct word with the investor, in which so the investors will be contacted that say we are considering to make say some special purpose vehicle arrangement, say this securitization process. Are you interested in that? That is, are you interested in like subscribing the securities which will be issued by our subsidiary, which will be issued by a trust which is formed by us in form of a special purpose vehicle? The investors may have a kind of requirement like this, that we would like to see say your receivables. Suppose the bank has the receivables from let us say Tata Consultancy Services, from Reliance, from Adani, say from let us say that Infosys. These are the organizations from which the bank is having receivable, and apart from that, so the other receivables are also there. Now the investors may insist that say we would like to choose the loans which you transfer to the special purpose vehicle. So it is like the cherry picking portfolio. So investors will decide that say these are the good loans which you have given and which have almost no chances of the default. We would like you to transfer them to the special purpose vehicle. Only in that case, whatever the special purpose vehicle issues the security, say we would like to subscribe it. Of course, in this case, so the rate of interest will be kept lower. Why? Because the risk to the investor is substantially less. That is the way you can have the cherry picking portfolio. Further, practically what happens at say there is certain facilities called like the credit enhancement facilities, or we can say a kind of so the insurance for the receivable. Now from investor point of view, they are aware that if at all these loans, if at all they default, then the special purpose vehicle will not receive the amount. In that case, they have to bear the loss. That is the reason the investors may seek for additional so the comfort for making investment. So they will tell the bank itself so to give insurance say against these receivables, in a way that say if at all an amount is not recovered from them, then in that case you have to bear the loss to the extent of 60%, 70%, 80%, something like that. At the same time, say it may happen that say the investors may ask the bank that say you get the additional insurance for these receivables. Of course, you have to make the payment of the insurance premium. However, that will give again a kind of security to us for making investment. Always in the market it will be like this only, that investors want more and more comfort in making investment. With that, so the rate of interest that they will be getting will be reduced. This is the way, say we have a kind of, say this kind of additional facility also to the investor. Yeah. The first is the diversification, regularity requirement, and protection against default. That is say default. We understand that over here the investor will have the different kind of investment opportunity. So it is like a kind of diversification. And one important point is the meeting with the regularity requirement. What does that mean? I just give a small explanation of the same to you. Let us say that as far as HDFC Bank is concerned, it is creating a special purpose vehicle by just transferring the loans which have been given to agriculture like segment. So whatever the loans which have been given to the like farmers, say with that only a special purpose vehicle is formed. As far as the, let us say, a financial institution is concerned, it has a regulatory requirement. It is mandatory, let us say, for a financial institution that 20% of the total investment has to be made, say, in agriculture sector. Then if at all this financial institution is purchasing these securities issued by this special purpose vehicle, it is deemed that the financial institution has indirectly given finance to the agriculture sector. That is what's the meeting with the regulatory requirement. From the angle of the investor, the entity which buys the assets collectively, diversification of the risk, purchase of the securities backed by the different types of the assets provides diversification of the portfolio, resulting in the reduction of the risk. Because even the bank might have given loans to the different sectors, pharma sector, then FMCG sector, PSU, like that, say to the number of sectors the loans have been given, and with that the special purpose vehicle is formed. Then from investor point of view, again, so the investor has indirectly made investment to all those sectors, because the receipt of the special purpose vehicle depends upon recovery from them. Regulatory requirement, acquisition of the asset backed belonging to a particular industry, say micro industry, helps bank to meet the regulatory requirement of the investment fund in the industry specific. Protection against the default, originator may provide, originator means bank, may provide additional security in form of guarantee that in case of default to some extent, it will make good the same. And this is what we understand is one of the selling feature. Because for special purpose vehicle, it will not be very easy to sell the securities. Convincing of the investor is really very difficult. And in that sense, this will become one of the selling feature, that you don't have to bear the default. Why? Because if you don't have to bear the entire default, in case of the default, the originator is there who will partially bear the loss. Moreover, there can be insurance arrangement for compensation for such default. Further, comparatively low risk, purchase of the securities backed by the different types of securities provide diversification, resulting into the reduction of the risk. Investment can be made as per risk bearing capacity of the investor, so different tranches of the investment. Investment can be made to receive the early cash flow or later cash flows. So regarding the repayment, whatever the kind of tranches that they issue, and whatever the requirement which I have, accordingly I can make investment in one of the tranche. Cherry picking portfolio, which I've explained to you, that the investors will specifically choose that these are the securities for which, say, we want you to create a special purpose vehicle.